Good morning, everybody. Welcome to the Vlog with Dan Sheridan. And today, with the market, very high levels today, 28.36 up 24. We're approximately 100 points off the all-time high in SPX. But we've had a bumpy road lately because of the tariffs. And the VIX is relatively high, 18.41, is down a couple points today. But volatilities across the board in stocks and indexes are still kind of in that upper end of the range. So what's a way that if I'm a owner of stock, and as we go through this Willy and Wily ride here with U.S. versus China and these tariffs things, which may not end soon, how can I get with stocks up one of the biggest quarters in the history of humankind over the first 3 months here? How can I get a little more downside protection? And with us only off about 100 points from the highs, volatilities are still high. So here's an example of Apple. Apple's at $186. It's come down quite a bit lately, bounced a little today. But what if I said, hey, I've owned Apple, I've done well on Apple, I'm long it now, but how can I get, excuse me, over the next month a little more downside protection? And right now with option volatility is pretty high. Matter of fact, you can see here as I look at implied volatility levels here, you can see they were low, and with all this little bit of going down in Apple in the market and the tariffs, volatility has come up. It's come down a little bit, but they're still at pretty high levels. So what does that mean? It means that I can get some more downside protection when the volatilities are high. So let's take a look at an example here. So I look at in the money covered rights when I want more downside protection when the volatilities are higher, which they are now. So let's go to an example in Apple. So it's at 186.47. And here's an example where I'm buying 100 shares of stock and I'm selling a June 14 expiration that's 31 days out. I'm selling the 180 calls, $6 in the money. And because the premium levels are relatively high, if you look at the 180 call, the puts are trading at almost a 30 volatility here. Puts are trading at almost a 30 volatility for the 180 calls. Applied volatility, are the puts, and the calls are trading up there. You see at about a 31 volatility. So again, if we go back to the chart here, you could see over the last year in terms of volatility levels, in that 31 level, it's quite a bit higher than it's been in a while, right? Most of the year. So based on that, I see an opportunity to do some in the money covered rights. And as we look here, so I'm selling the June 180 calls, selling one, and buying 100 shares of stock. The premium on the June 180 calls right now is about $10.50. So you get a lot of downside protection on this, much more than you would at an option $6 in the money if the volatilities were lower. If we didn't have this volatility lately in Apple stock going down. So as you look at this, if you look at the expiration break even on the downside around 176, well, with the stock at 186, that gives you over the next 31 days about 5% downside protection on Apple. So with the stock already, if you look at a price chart, it's already come down quite a bit. And by selling an in the money call, you get an additional 5% as of today, May 14th, from the current price of 186. You get another 10 points protection by selling an in the money 180 call that's approximately going for $10.50. And that's the June 14 expiration, 31 days out. So that's what I'm looking at now. I think that's a way to get some good downside protection when the volatilities are higher. And there's a lot of nervousness in the economy and in stocks, and that's in the money covered rights when the volatility is higher. So thanks, everybody. Have a great day and continue to work on your craft. Keep in mind, we have, I think, the best live seminar in the options industry. This year, we're doing it, the Chicago seminar that we run once a year. I don't know if this is the 8th year. I don't even know how many years. But at the Chicago Gleacher Center in Chicago, September 5th and 6th, you can get information on our website. We have about 13 speakers. We have a nice balance of successful options retail traders from our community, as well as people outside the industry, like Tom Sosnoff at Tastyworks, JJ Kinahan and Kevin Hinkle from TD Ameritrade, Brian Overby from Ally Invest, Jim Bittman, legendary instructor from the CBOE, and legendary mentors Mark Fenton, and extraordinary and phenomenal mentor and teacher, a guy by the name of Dan Sheridan, an Irishman from Chicago. And we have a lot of good retail traders. I think for the price and what you get, there's nothing like it in terms of getting meat. It's not an infomercial. It's as we say, it's a meat market. It's a meat market of options trading, a lot of good material. You need to be there. We have a limited seats. I think we have 115, 117 seats, and we're usually pretty close, if not all, depending on the year, sell out. So you want to get involved with that. All right, that's my 2 cents for today. Have a great day. We'll see you later.